Regarding autonomous vehicles, we estimate that by the end of the decade, the robotaxi business might be valued at $28 trillion. Because of this, based on our assessment of Tesla, we believe that this industry will produce the majority of the company's value. It will essentially transform the company's current one-time electric vehicle sales model into a regular revenue stream derived from the robotaxi service that Tesla intends to introduce. Robotaxis have the potential to be far less expensive than current ride-hailing services and far less expensive than the roughly 70 cents per mile cost of driving a personal vehicle in the U.S., which makes them disruptive. Robotaxis could start at a higher price initially, but at scale, it could only cost 25 cents per mile. We use a 5-year compound annual growth rate hurdle of at least 15% for each company in our valuations. In the course of our preliminary evaluations, we also take into account our judgments about the management team when evaluating qualitative aspects like culture and people management. Sam, how about you start us started on Tesla right now? It is important to note that these qualitative scores will talk about important subjects including the future of Tesla's robotaxi, the security of driverless cars, and the difficulties Tesla has in the Chinese market. As we examine investor confidence in Tesla stock in this video, we'll also discuss Elon Musk's pivotal role and the company's potential for expansion through creative initiatives like the MEAP PAC division. We'll talk about the anticipation and setbacks around Tesla's robotaxi network, the relaxation of rules pertaining to self-driving cars, and the significance of obtaining accurate information from a variety of reliable sources. We'll also discuss the difficulties in valuing Tesla's autonomous vehicle division as a result of cautious assessments and erratic market movements. So settle in and get ready for a thorough analysis of the reasons why experts predict a sharp rise in Tesla stock. This video is for you if you have a strong interest in Tesla and the direction that autonomous technology is taking. Remember to like and subscribe to Tesla Stock News in order to receive updates on all of the most recent information and analysis about Tesla. Now let's get started. Let's now investigate the possibility that Tesla's robotaxi may materialize and the implications of the current regulatory environment for the company's lofty goals. We'll also talk about the safety of driverless cars, which is a popular subject because both regulators and prospective consumers have serious concerns about safety. Although China is a sizable market for Tesla, there are unique regulatory challenges there. What obstacles must Tesla overcome to be successful there? Key man risk, which deals with Tesla's significant reliance on Elon Musk, is another crucial factor. Should he retreat, what would happen? We'll talk about the dangers of having this kind of a key player in the business. What is the valuation of Tesla, and what are the growth projections that investors are making? Are these too optimistic or realistic? A fully autonomous vehicle is something Elon Musk has long promised, but it hasn't happened yet. It's challenging to create a car that can drive itself safely in all situations, let alone one that is fully autonomous. Based on safety data and thorough investigation, some academics believe a robotaxi network could operate in the next years, despite delays. Timeline uncertainties, however, continue to be a major obstacle. On the regulatory front, there is positive news. According to Tasha Keeney of ARK Invest, there has been a significant change from the previous position of strict regulation and skepticism regarding autonomous vehicles. More states and nations are becoming receptive to them. This shift is partly due to the startling increase in traffic fatalities and accidents, which are frequently caused by distracted driving, particularly when using a smartphone. Because they reduce human error, autonomous cars have the potential to make roads safer. The plans of Tesla may benefit greatly from this relaxation of regulatory worries. Consider yourself an ordinary American who receives this news. Given the delays thus far, you may have doubts about Tesla's ability to introduce completely autonomous vehicles, but you might be able to hope that these futuristic cars are getting closer to being a reality now that regulatory issues are lessened. You may also worry about Tesla's dependence on Elon Musk and question what would happen to the business if he weren't in charge. All things considered, you may be cautiously hopeful about the future, seeing opportunities for better roads and creative transportation options, but you may also be waiting to see how things really work out. Autonomous automobiles are far safer than manually operated autos, according to Kathy Wood of ARK Invest. Based on accident statistics, driverless vehicles may be up to 80% safer, according to data that ARK Invest highlighted. For example, compared to a manually operated Tesla, the full self-driving system of Tesla is approximately 5 times safer, and it can get even better. The future of transportation is completely changed by this significant safety margin. Tasha Keeney highlights the significance of these safety advancements, pointing out that fewer collisions translate into safer roads, lower insurance costs, and more public trust in driverless technology. For everyone who cares about road safety and the future of driving, this safety factor is important. It serves as another evidence of ARK Invest's extreme optimism over Tesla's autonomous car plan and its capacity to completely transform the automotive sector. Additionally, Kathy Wood draws attention to the regulatory obstacles Tesla is currently encountering in China. The business and the Chinese government are currently having negotiations regarding the potential for data to be taken outside of China. This is a sensitive matter because Tesla's business operations may be greatly impacted by Chinese laws pertaining to AI and driverless vehicles. Tesla needs to successfully navigate these regulatory waters in order to succeed in such a large and significant market. According to Tasha Keeney, the conclusion of these talks may establish a standard for how foreign businesses respond to data and artificial intelligence laws in China. There is a lot on the line, and how Tesla handles this might affect not just its future in China, but also more general industry norms for data processing and artificial intelligence advancement. For Tesla, this is a pivotal moment, and ARK Invest is keeping a careful eye on these events. Although there are risks associated, new routes provide Tesla's growth potential. In order to propel the autonomous team towards a commercial launch, Elon Musk is essential. Tesla's performance in this field is largely dependent on his leadership and vision. It is difficult to find a visionary leader to take Elon Musk's position, nevertheless. Maintaining this kind of creative leadership is critical to the company's future success, so losing Musk might be quite risky. Advancements in vehicle technology and autonomy are progressing rapidly. While Elon Musk has been a significant figure in promoting autonomy, his contribution may not be as crucial due to technological and algorithmic advancements. These advancements are driving the industry forward, making autonomous vehicles more reliable and efficient. Factors such as stock-based compensation, R&D investments also affect the enterprise value to adjusted EBITDA, showing the financial commitments Tesla is making to stay ahead in the game. Tesla has a promising outlook for significant revenue growth with its upcoming projects and innovative products. The company boasts impressive profit margins and revenue potential, particularly in its MEAP pack division. This segment is poised for expansion, with plans to add a second MEAP pack factory in the next 6 to 8 months. This expansion is expected to boost Tesla's revenue significantly, showcasing the company's ability to innovate and grow in new markets. When assessing the valuation of Tesla's autonomous driving business lines, it's essential to consider the relatively low multiples being applied. Despite this conservative approach, there is an expectation of significant growth in the 5th year, making it value of its innovative efforts. The launch of Tesla's robotaxi network is a significant milestone to watch for in the coming years. However, the probability of this launch happening soon is estimated to be very low, between 1% and 3%. Historically, Tesla has faced delays with its ambitious projects, but even with these delays, the impact of a successful robotaxi network would be substantial. This underscores the importance of patience and realistic expectations when it comes to groundbreaking technologies. Considering the probability of events is crucial, especially when making long-term predictions. One bold prediction is that powered flight as we know it might not see significant advancements for 1,000,000 years. While this might seem surprising, it reminds us to consider various factors and probabilities when looking at future technological developments. As an investor, you might find the emphasis on facts and multiple sources for information refreshing and necessary in an age of misinformation. Knowing that reliable data and diverse perspectives are being prioritized can help you feel more confident in the information you receive. Regarding Tesla's robotaxi network, you might be both excited and skeptical. The low probability of an imminent launch highlights the challenges of such ambitious projects, but the potential impact is undeniable. It's a reminder to manage expectations while staying hopeful for future innovations. The idea that significant advancements in powered flight might not occur for a million years might seem far-fetched, but it illustrates the importance of considering probabilities and long-term perspectives. It encourages a thoughtful approach to future predictions and technological advancements. That wraps up our deep dive into the latest developments surrounding Tesla and its ambitious projects. Let's quickly recap what we've covered. We explored the confidence in Tesla stock, focusing on the prospects for its robotaxi, the safety of autonomous vehicles, and challenges in China. We also discussed the crucial role of Elon Musk and the company's growth potential, projects like the MEAP PAC division. Despite delays, there's optimism about Tesla's robotaxi network launching in the next few years. Regulatory concerns are easing as more regions warm up to autonomous vehicles, potentially leading to safer roads. However, Tesla still faces significant regulatory hurdles in China. We emphasize the importance of relying on proven facts and multiple sources for accurate information and the challenges in assessing Tesla's autonomous driving business due to conservative valuations and unpredictable market trends. Now we have a few questions for you. Do you believe in the safety and potential of autonomous vehicles? How do you feel about Tesla's reliance